Fund Supermart, your online gateway to unit trusts.
What is the outlook for Malaysia's economy in second half of 2015?
Thank you, Rushi. We're in very interesting times at the moment. The world's developed central banks, such as the US Federal Reserve, Bank of England, Japan Central Bank, and also now the European Central Bank, have been printing money through a thing called quantitative easing, and we're now right at the point at which people are speculating when the United States will actually start to raise interest rates. They've been down at close to 0% since 2008. So for 6-7 years, they've been at ridiculously and unrealistically low level. Whilst they were at a low level, a lot of money poured into Malaysia and Indonesia and other emerging markets because the interest rates were significantly above inflation and because they offered a better return. As interest rates go up in the United States, the interest rate differential reduces, and so a lot of that money, the hot money, leaves. A lot of it has left the equity markets. It's just started to leave the fixed income markets like Malaysian government securities. So it's possible we might see more of this hot money leaving. So I think the outlook for the second half of the year is for economic growth to be affected to some extent by the low commodity prices, by a slightly more challenged external account, and of course a weak ringgit, which is the result of these things. So I think economic growth will slow, but the authorities seem to be confident that it will remain between 4.5% and 5.5%.
How much further upside is there for investors, and are valuations still appealing? What about the earnings outlook?
It's very hard to be specific about where the upside for any market is, because there's a lot of animal spirits involved and emotion in equity markets. But at the moment, on a forward price earnings ratio basis of around about 16 to 16.5, we're about in line with average, if not slightly below average. What is disappointing is that earnings growth forecasts have fallen significantly this year, from some 13% forecast at the beginning of the year for 2015 to around about 3% at the moment. We're about to enter the second quarter results season. We'll see how it turns out, but I don't anticipate a big turnaround in earnings forecasts. So there is an upside to the market in specific sectors. I think mainly those that might have their costs under control and keep their cash flow moving. And because the share prices of a number of good quality companies have fallen to valuations that are attractive. Off the top of my head, I would say oil and gas stocks and other commodity related stocks like plantation stocks have been hit quite hard and are offering quite good value.
The depreciation of the ringgit has weighed on market sentiment. If it continues to weaken, what do you expect to happen? Is it all doom and gloom?
Well, it's not just Malaysia that's suffering this problem. The world is full of traders, and over the past few years, traders have parked money in Malaysia and other emerging market economies for a higher return than they're getting in US, which is basically zero. And as I mentioned before, a rise in interest rates in the US might lead some of that money to return to US dollar. But I would like to repeat that the situation now is so completely different from the situation back in 1997 and 1998, when we ran significant trade and current account deficits, which are now in surplus. Fitch recently warned that they might downgrade their outlook for Malaysia on the basis of twin deficits, that is budget deficit, which we do have at the moment, and current account deficit. After a closer look, they decided that the current account won't go into deficit. So the outlook remains stable. So I think we have to make adjustments to a weaker ringgit, probably buying fewer Hermes bags and Louis Vuitton clothes, etc. And the cost of imports is going to go up significantly. But if the ringgit remains weak for a while, we do improve our export competitiveness. And one sector that looks particularly attractive is the electronic sector, where in Penang in particular, we have a significant competitive advantage against our neighbouring countries.
Where do you find investment opportunities in Malaysia? What sectors or teams you have the most and least preference for?
Okay, Rushi. Well, as you know, we're fundamental investors that look at the stock market from the bottom up. So we're not really affected, or we don't make decisions based on macroeconomic developments. Historically, Malaysia has always had extremely strong companies exposed to the domestic economy. You know, we have an emerging middle class which is able to buy cellular phones, to upgrade their homes, to change their clothing more regularly, etc. So a lot of retail plays and banking plays have been in our portfolio. We've also found that insurance companies here are extremely strong because the penetration rate is so low. In addition, because of weak oil prices, we found that a couple of very well-run oil and gas companies, which previously were too expensive for our tastes, have come to levels at which we find them attractive as well. So I think predominantly we would remain convinced that over the longer term, Malaysia's domestic economy will continue to grow.
What are the biggest challenges and concerns that you face during stock picking?
Well, stock picking is as much an art as it is a science, and I suppose the art is to try and tell if the person that you're interviewing is telling you the truth. Sometimes we get that right. I'd like to say most of the time we get it right, but sometimes we are misled by management and get over-enthusiastic about companies that fail to deliver. But we have a system of checks and balances in order to try and prevent that, and that is that different analysts see the same company separately. So it's very difficult for us to fall in love with the company because we have to convince our friends also of the company's worth. But that's one risk, that the company's telling you lies. I suppose there are all sorts of unexpected economic developments that could affect a company, but we like to invest in companies that will do well even if the economy slows down to a snail's pace. The secret to that, we think, is balance sheet strength. And Aberdeen, I would say, would be a good company to use to carry out investments in difficult economic times, because we do the extra work and walk the extra mile to make sure that the governance is correct and that we really understand the company before we buy it.
What advice will you give investors who are keen on investing in Malaysia?
I think the most important advice is to do your homework. Don't rely on others, apart from Aberdeen Asset Management, to do your homework for you, and don't follow fads. Know what you're investing in, and as far as possible, make sure that the company in which you invest understands what a shareholder's right is. You know, having a share in a company actually means that you have some input into what happens in the company, and that you are entitled to exercise that right at annual general meetings, and that the management of the company should understand that. There are some companies, I think, that use their listing status as a source of funding without realizing that there is some reciprocity, that there is some obligation that they have towards the minority shareholder. So that's the most important thing, to invest in the fundamentals of a company and to understand what they're doing, and to be confident that they're telling the truth. And then after all that, which are the main quality criteria that Aberdeen has, is make sure you buy it at the right price. You know, don't buy it at the lofty valuations, but buy it at a price at which you think, all other things being equal, there is a decent upside to that stock. It's as simple or as complicated as that.